Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Tuesday, February 10, 2009. Treasury Secretary Geithner unveiled the administration's financial stability plan today. In it, he said the Treasury and other federal agencies will partner with private capital to create a fund for troubled bank assets, a trust sometimes called a bad bank. The program will start at an initial $250 billion to $500 billion and could produce up to $1 trillion in financial capacity. The Fed will use its balance sheet to provide the financing, while the FDIC might provide guarantees to investors who participate in the program. Geithner also announced that the Fed will broadly expand to $500 billion to $1 trillion an existing $200 billion program to unfreeze the market for commercial, student, auto, and credit card loans. A third component of the plan would involve a review of the capital of all banks, a stress test before they will be eligible for more government funding. The yen rose in the wake of the release as investors' demand for safe haven increased. The Dow Jones Index fell 340 points by 2 p.m. Eastern, which pushed the dollar-yen pair to the 90.25 level, about 130 pips lower than before Geithner's speech. There are concerns the financial recovery plan may fall short of reviving lending, though the optimism preceding the event may have heightened expectations. Also, a lack of details scuttled the reaction from Wall Street. The greenback was also on the receiving end of safe haven flows. The euro-dollar pair, which rose overnight to retest the 1.3075 level prior to the speech, fell 180 pips in the next several hours, though that fall stayed within the levels we saw earlier in the session. The euro-yen pair was unable to break above its level near 119.50, only briefly touching that area before falling more than 300 pips off that high to the 116.40 level. That resistance level had been set 2 weeks ago, and it remains to be seen how today's bout of risk aversion affects sentiment going forward. Risk aversion pushed the US dollar-Canadian dollar pair about 300 pips higher to test the level around 1.2490. That wiped out most of the gains for the loonie seen on Friday and returns the pair to its resistance level from last week. The pound-dollar pair fell below its line of support that goes back to January 25th. Yesterday, the pair approached the 1.50 level, but by 2:30 p.m. Eastern, the pair was more than 500 pips lower, trading below 1.45. The 1.45 level used to be resistance, so it will be interesting to note if it acts as support now or if the dollar extends its gains the rest of the week. News out of the UK showed retail sales increasing 1.1% in January compared to a year ago. That follows 3 months of negative figures. However, most of the gains came from an increase in food prices and a strong first week of the month caused by the continuation of a short-lived pickup in spending immediately after Christmas. In a second release, the balance of surveyors reporting falling rather than rising housing prices worsened from 73.9% to 76.3% in January. The RICS data did show that new buyer inquiries increased for the third consecutive month, and the average inventory of stocks fell. The UK trade deficit shrank to £7.4 billion for December from the £8.1 billion seen in November. This was mainly as a result of falling imports as exports rose by a minuscule amount. Finally, the Conference Board leading index for the UK decreased 0.6% in December as lower exports, consumer confidence, and order book volume continues to make negative contributions. The pound suffered heavy losses against the Swiss franc and euro today as well. Here, the pound-franc pair saw a very steep sell-off that started overnight and extended in New York trading. The pair, from a near 2-month high at the 1.7480 level, plunged 700 pips to trade near 1.68 by 3 p.m. Eastern. The euro, meanwhile, rallied about 225 pips against the pound following its intraday low. Tonight, Australia will reveal data on consumer sentiment and home loans. Overnight, the UK posts its employment data, and the Bank of England publishes its quarterly inflation report. Germany, meanwhile, unveils its final version of January CPI. Tomorrow, both the US and Canada release their trade balance figures. Canada will also unveil a measure of housing prices, and the US will post its Treasury budget for January. And that wraps up our broadcast for today. Thank you for joining us here at CMSFX.com, and happy trading.